Mavericks? It's great to see you here. This is Rob Reinhold. It is August 30th. We have one more day left before we close the books and send out profit distributions in August, so let's cover the market here. Today was a down day, really across the board. So if we take a look at it, we had the S&P down 1.1%. The world index down a little bit less, but roughly the same. Cryptos, they were a mess. They got hit. They've been very weak lately. Gold down about 1%. That's a pretty big move in gold. But wow, look at that move in oil. That was a big move lower. And we actually had some fairly negative news out of Iran that said that maybe we aren't going to get an Iran agreement that is going to release more oil. Oil popped for a bit and then it sold off. And remember, whenever something should happen and it doesn't, it's a great sign that that's where the market is going. So when good news comes out, like on a stock after earnings, and the stock goes down, that's a clear sign that that stock's going down. If even good news can't make it go up, and look, we get the same thing in reverse. Terrible news comes out, the stock goes up. People always sit there scratching their head and they try to fight it. At Maverick, we say trade the market in front of you. If bad news can't even make a stock go down more, it's likely going to go up. So in the news today, we had another big down day. We had that 50 MA tested. We'll take a look at all the technicals here in a second. But we had a big day in Euro. And the ECB members have been very vocal lately. And early this morning, we had one of the ECB members come out and say, we want even bigger hikes and faster hikes. A lot of the ECB is getting very, very hawkish here against inflation, which has definitely helped the euro dig itself out of the grave it's been digging lately. But let's take a look at the technicals here. First of all, we're going to start off with the S&P here. And we talked about this band of support in this area. And we talked about how important it was for the market to hold this area. And you can see we broke down. And we said, okay, if it breaks down, the next stop is the 50-day moving average. And take a look at today. We are below the 50-day moving average. We had a little bounce at the end of the day. So a lot of times we see things pierce. We see things pierce moving averages before they finally either bounce off it. I am not ready to call a break in the 50-day moving average. However, if there is a break lower tomorrow and we stay low all day tomorrow, the 50-day moving average has been broken to the downside and we are going to switch to a short portfolio where we're looking to be more on the short side than the long side. The next support I'm seeing is right here along this support here, somewhere down here about 39.20. Understand, that is still about 1.7% lower. So we think this market could have up to 2% more to the downside before we even get to the next support level. If we take a look at the VT, same thing here. We clearly have dipped below. This one's a little worse. We are clearly below that 50. If we don't have some sort of big update tomorrow, this thing is going lower, probably looking to go around this $87 area. Again, this is about 1.5%. So if we don't bounce immediately tomorrow morning, we think there's another 1.5 to 2% on the downside. And when we flip over to the cryptos, once the cryptos broke this uptrend line, and I've been talking about this for the last couple of weeks, once it broke this, it was no longer long and only should be a short. And you can see all we're getting is falls, big falls, little rallies. Big falls, got a little rally yesterday. Cryptos do not look good whatsoever here. So if we take a look at our outlook here, we were at an outlook of 0. Remember, when we started the week, we were trading between the 20 and the 50 period moving average. The lines had flattened out. We were at a 0. And we call that no man's land. When you're a trend trader and you see the market is between two moving average where one is going up, one is going down, that's about as inconclusive of a score as you can possibly get. Now we are clearly now below the 20. We are not ready to call a break of the 50 yet. We could get that tomorrow. We've got to move to a -1. And if that 50-day moving average is truly broken tomorrow, we'll move to a -2. And we're going to switch to a much more bearish type of portfolio and trading style. Let's take a look at what's on the calendar for the rest of the week. We've got ADP tomorrow. Don't even care about this. The market will ignore it. We have CPI out of the Swiss franc. You know what? Typically I'd say that this isn't going to matter, but we're starting to see these numbers matter for the Swiss franc. So if you are trading Swiss franc, you do need to be wary of that CPI report. Tomorrow morning we do get ISM out of the US. That's always good for a 30 to 40 pip push on the dollar. Nothing much more than that most likely, especially with us going into Friday where we are having the US payrolls report. I've seen estimates for around 300,000. We are going to be meeting live as a firm for that meeting. So if you're one of the Maverick traders, come join us. We're going to be putting trades on right there as this event happens. And we're going to try to grab some pips off that. Now remember, this is going to be happening in September. So these are all going to be pips for our September payouts starting on Thursday. So let's go in and take a look at these currencies one by one, and let's see which one over the next 24 hours looks like the right trades. Remember, we talk about hunting at Maverick. This is where we're trying to find the right pair. We don't just pull up dollar yen and trade it randomly. We do relative strength. We focus on these are the best pairs to trade over the next 24-hour time period. So let's take a look at them. Alright, I'm going to go through the cryptos pretty quickly here because they're all terrible. Everything is below parabolic SAR. EMA is sloping lower. RSI is below 50 and going lower. So look, they're just, none of them are great. We switch over to Bitcoin Cash and we can see virtually the same chart pattern. We're just maybe basing a little bit here, but there's no reason to buy these. They're likely going to break lower. If we take a look at the best performing one, it's Ethereum. Ethereum is the best performing one. Now, when you say best performing, that means it's relative to what everything else is doing. I would not buy Ethereum here at all. There's not a buy signal here. We have a flat 13 EMA, we've got a flat RSI, and we've got a parabolic SAR that's actually more negative than positive. Nothing tells you to buy this. It's just relatively the best of all the cryptos, which means that when the cryptos are finally a buy sometime in the future, Ethereum is likely to be the one you should buy. The outperformers typically go up more than the underperformers. When we come over here to Litecoin, you can see it looks worse than all the others. This one is more of a -3. Got a sloping EMA, sloping parabolic SAR, RSI that is starting to dip down, going down below 40. Everything in cryptos is just a sell. So let's jump over to the foreign currencies. Here is the dollar on a 4-hour chart with our parabolic SARs. So look, let's count these all up. EMA is starting to slope higher again. After being flat for about 2 days, we're starting to slope higher again. Remember, we want to be in currencies when this EMA is sloping higher because that means we're getting really nice candles. We had a pullback. We flattened out. We bottomed out. Look, we don't know if we're going to break through resistance here. But what we do know is that when we buy things that have some momentum, it typically works out better for us. So for me, dollar is a +2, ready to go. We jump over here to the yen, and I got to say, the yen, it's a really sad thing. I used to love to trade yen, and I used to love to trade yen when the market was crashing because the yen was money. The market crashed, you bought yen or you sold yen crosses, and you made 1 to 2%. That was what it was. It was that easy. It was clockwork. And thanks to the Bank of Japan, the yen is broken here. It's just broken. So the yen is a -1, a 0, somewhere in there. There's no reason at all to even play yen at this point. Now look, if the market strengthens up, I will look at being short yen, but I don't think that's what the market's going to do. I'm really looking at this market starting to break down more and more. So I really want to find what is going to pay off if this market breaks down more, and the yen is not it. Moving to the Swiss franc, you can see the Swiss franc is also not participating. The Swiss franc is another one of our currencies of safety, and it's saying, I'm not being bought for safety here, I'm actually being sold. You can see here, we've got a -2 on this, -3. This just doesn't look great. Now, if someone's asking why does the Swiss franc look so poorly, I think it's because the euro looks so great. The euro and Swiss franc has been very negatively correlated lately, and the Swiss franc has been going up while the euro has been going down because of money flows. People are moving money out of Europe into Switzerland because they're worried about the eurozone. All of a sudden, now the ECB is looking like they're going to become much more aggressive and maybe the most aggressive central bank in the world, surprisingly. The money's flowing back the other way. It's flowing out of Switzerland and back into the eurozone. And so this is just a +3. Euro is the strongest currency right now. Look, I don't care what you think about the European economy, what you think about their inflation, what you think about anything. The market is telling you that right now the euro is going up. We don't know how long that's going to last, but it's telling us right now it's going up. Look, we just had a nice little spike. Maybe we base or pull back, but I think both dollar and euro can be bought here at some point in the next 24 hours. The pound has been one of my favorite shorts, and I continue to like it, but I really want to point out these long upper shadows. So look what happened here. The pound ran up and fell apart, and then all of a sudden it ran up and fell apart, ran up and fell apart. This is telling you, hey, you want to be shorting pound when it has a run. Take a look at this candle over here. Ran up, fell apart. We want to be looking at shorting pound when it has some sort of little short-term spike, and I think that's what you want to continue to do. So pound is definitely on my top of my short watch list going in the next 24 hours. The CAD, I'm going to give this one, when you zoom out here, you can see that we're still just in this big band of support here. So while it does look fairly poor here on the short term, we've got it below a downward sloping 13 EMA, down below the parabolic SAR. RSI is flat. I think there's better shorts out there. I think the pound looks like a better short. Let's see if we have a better short out there with the Aussie. And you can see here the Aussie is meeting a really big area of support here. The Aussie support right here is trying to bounce off this level. Look, we may get another candle or two, but I'm ready to short this thing once we get a little bounce off this support level. And if it breaks below that support level, it's definitely a sell as well. Now again, this is the Aussie basket. This is all of the Aussie pairs divided equally by 7, all the other currencies we trade, to really get the average score of the Aussie. So Aussie looks like a decent short, not quite ready to go. And if we take a look at Kiwi here, we have loved Kiwi short. It's been our favorite short for the last couple weeks. And you know what? It's not moving lower significantly right here, right now. You know, we love these kind of moves where we can get short, where they just really go in one direction with maybe a couple green candles in there. We haven't really seen that yet. I think the Kiwi is moving lower, but I don't think it's ready to go right here, right now. So if we take a look at what I liked here, I liked Aussie and pound short, and I liked dollar and euro on the long side. So this is our velocity scoring. As I said, cryptos look terrible. Don't buy them. They should only be shorted here. Euro is the strongest one right now. I know that you don't feel like buying euro. I wanted to short euro just a week ago. I was ready to go to euro short. But this week it's showing me, hey dummy, you're wrong. Get on the other side. This train's going the different direction. As a trader, my job is not to be the smartest person who could write a fancy essay on all the reasons why euro should be going lower. My job is to make pips. And to make pips, you have to find the currencies going one way and sell them against the currencies going the other way. That's how you make money as a trader. You don't need to write an essay. You need to follow relative strength. I'm going to pair up euro against Aussie and pound, and I'm also going to look at pound and Aussie versus the dollar. Let's take a look at those crosses right now. First up is euro pound. Euro pound, you can see here, we've had a nice trend here over the last, let's call it 3 to 4 days. We just had this big spike here. So whenever you have a big spike, you just have to be thinking to yourself, okay, it's probably going to come down a little bit here, but where's it going to come down to? And we broke out of this base right here at about 85.50. So I'm looking at these levels saying, hey, you know what? Once it comes down to this 85.60 area, I'm going to be licking my chops for a long here. All I need to do is wait for it to give me a confirmation candle to the upside, and I'm ready to buy here. So it's going to be somewhere in the 85.60 to 85.80 zone. But remember, we don't buy it on the way down. We let it fall down, we let it bounce, and then we buy it on the way back up. Stop on this one. Let's take the bottom of this last wick here, the lowest point in this base, and use that as a stop. Next up, you could also take a look at Euro Aussie. Same thing on Euro Aussie. We've got this big spike up over the past 24 hours. We want to let this thing come back down somewhere into the 145.20 to 145.50 area. That's where we want to see it to get into. We don't want to buy it on the way down. We want to buy it on the way back up as it's bouncing. So maybe somewhere in the 145.60 to 145.80 area on a bull pullback. The other one I want to take a look at is pound dollar. Pound dollar, we got a really nice low base forming here. So as you can see here, we had a base back on the 23rd that lasted for about 3 days. We broke down below that base, and look at us here. We are using that point as resistance. We are right at the bottom of the next base, and you can see we're looking to trade below it. I like this trade right here, right now, at 116.52. With that being said, we could easily have a bounce all the way up to 117.50. So if you're going to enter here, I like entering a half position and then waiting to enter your other half position. I think if you are a little bit more patient, you might get a little bit better entry point up at maybe the 117 area on a little bit of a bounce. But a lot of times, I like to say it's more important to get into a good trade than it is to get the timing perfect, because we've all been there where we waited too long for the quote-unquote perfect timing and we missed a major move. So a lot of times, this is how you get into these positions. You scale in. Take a quarter of the position you were going to take. Have a very wide stop all the way above 117.5. And then you have all the time in the world to let this trade develop. If it takes 2 to 3 days, you don't have your full position in there, and you can be adding into it over the next couple of days. And then if we do get that big break, all of a sudden you survived this period of nothingness to where a lot of people get chopped out with their stops. You were able to scale into this, let it develop, and then when you get the nice move in your direction, you've got a full position, and it's highly profitable. So in equities, tomorrow must be an up day. If tomorrow is another down day, I'm going to call that 50-day moving average as truly broken. And the next support is a good 1.5 to 2% below us. So big up day tomorrow, or else this market is headed significantly lower. I think it's headed significantly lower, which means I like buying any dip in the US dollar. And right now, I don't mind buying the euro whatsoever. It's showing great momentum to the upside. Looking to be short pound and Aussie against those pairs. For the rest of this week, we've got the midweek trading room, our live session. We do every Wednesday with our traders. Come join us for that one. Thursday, we'll be sending out a preview of the U.S. jobs report. And then on Friday, it is the U.S. jobs report. And again, Maverick traders, we are meeting live for that one. We're going to be making live trades right there. Try to make some pips off of that move. Thank you so much for joining me. This is the Currency Roundup. Goodbye, everyone.